got to remember CPI coming in at 2.6, and I've done several calculations factoring in the reduction in the price of oil, how that affects bulk goods being shipped, taking the baseline tariff, applying it, and we're really only looking at between a 6 to 8% cost increase just on the baseline tariff because of how much oil has come down, and it could even be at a break even on the cost, the cost of goods landed. So even if that is wrong, um, and off a little bit, and CPI is printing 2.6 by September, maybe it prints 2.9, the Fed is still over 4. So we're still in restrictive, significantly restrictive monetary policy. And what's happening in the bond market is flashing all kind of signals at the Fed, that rates on the short end have to get lower. So it's going to be very interesting, full of excitement as we enter into springtime. And it's listening to our podcast every week. A lot of it, because of we're in this unknown kind of environment, a lot of it may seem repetitive, but it's really good to stay very focused on the data, very focused on what's happening, and being able to make sure to provide that we're there to provide clarity and confidence to clients or people on the sidelines that are looking to become clients. And so, you know, if you're tired of us saying we have to wait and see, I'm sorry, but it still looks like we're going to have to wait and see before we can put our stamp of approval on the bull market continuing in the short term.
Yeah, I mean,
I
I
think we're
think
still
that's
in a
right.
bull cycle long term. Um, I think again,
Well, that's
I
one
have
of the
pretty high
things that
degree of
we
confidence.
haven't. That's one of the things we can't really. I don't think there's enough info to make a determination on that as of yet, but it's
I don't
possibly
have any wood to knock on,
certainly
so
possible. I do.
it's,
I'm
it's
knocking on
metal.
wood.
It's metal.
It's certainly possible, but it's something that we are going to keep our eye on for sure. I think I haven't seen anything new today come out about the tariffs or about any negotiations or anything like that. So I think that, I mean, it's just a whole lot of it's one thing, one indicator would say this and the other indicator would say something else. So it's a lot of just take a pause, take a step back and watch kind of what's happening. And we are doing that actively in the portfolios that we're managing, certainly trying to keep abreast of everything that's happening underlying under the markets, the technical aspect of it, but also in the news, the popular news that tends to move it a lot too.